Hello traders and market club members everywhere. Welcome to February and the first day of trading in the new month. Well, the big news was this weekend anyway in America is the fact that the New England Patriots beat the Seattle Seahawks. And when that happens, when a team from the American Football Conference wins, it tends to be a negative indicator for the market. Well, we've seen that early today, and we're looking at a chart of the Dow. This is the Dow Jones Industrials, the top 30 stocks, and I want to just share with you a couple of things that I'm seeing here. One is we're seeing the Dow really just touch its 200-day moving average right here. This is a very important moving average that a lot of money managers follow, and if we were to see the market close below there, that would be a strong signal that in fact the market is headed south. We'll see how that works out. But again, the AFC won, and it's usually, or it's configured to be a bearish call. I don't buy that all the time. I think you have to go with what the market's telling you. That's the best thing in the long run. Well, the other piece of news today is the fact that we have a new monthly red triangle on the Dow. Remember we talked about that just a few minutes ago on the chart? This is an indication that the trend, the major trend in the Dow is now down. Very, very important. So let's take a look at the next market, the S&P 500. As you can see, there's the 200-day moving average. We're well above that. We're actually above the lows that were seen in the middle of December, and the market seems to be trying to regroup. And again, if we put our trade triangles on, you can see it's a mixed bag. We have the long term still positive, the intermediate term negative, indicating a minus 60, which is a trading range, which means in essence, if you're not strongly in the market, just be out of it until it determines a strong trend, either up or down. Just be patient on that. On the NASDAQ, pretty much the same thing. It's a plus 65, actually a little bit more positive there because you have two triangles that are green indicating the trend is up in the NASDAQ. So it's a dichotomy here. We have the Dow in a negative trend, the NASDAQ in a positive trend, and the S&P in the middle in a trading range. So again, I think that's what you have to look at right now. But we're well above the trading range, above the moving average. But the big point here is really where we're seeing the support come in the market, and it's right around here, just coming really around the 4,500 level on this particular index. That's where the line in the sand is practically drawn. So let's see how that plays out. But again, it's a trading range with a score of 65, and it biased to the upside. The trend is positive, I would say somewhat mixed because of the mixed picture in the other markets. So let's move on. Now we're looking at gold. Gold has a longer term positive for the monthly and the weekly. Interim, the daily is negative, indicating you should be on the sidelines if you're using our World Cup portfolio signals. The RSI is above the 50 line, indicating a trend. The key here is going to be probably right around this level here. If we see the market move over, let's say 1285, I think it would be a positive sign that we're going to take a move up to our target zone. Here's what we think is going to happen. As you know, we were very bullish right around here. The market's moved up. We came down. We're coming down here. This is sort of consolidating in our opinion. I think if we move over the 1285 level, the next stop is going to be 1340, which is our target zone on the upside. That's where we're looking for gold to go before it has another breather. So watch gold very carefully. There's a lot of things going on in the world, particularly in Europe with Greece trying to renegotiate or get out of its debt. That's going to be an ongoing story, and it's going to get more dramatic as we move forward. But look at the RSI, positive for gold. Watch that 1285 level. Next market is the dollar index. The dollar index, of course, has had a really nice move up. It's continually, we've done very, very well in this market. And you can see we've just fallen below the parabolic. There's the parabolic above, and you can see we sort of flattened out here with no real trend. But the longer term trend is positive, as is the intermediate term trend. So again, it's too close to call and say, wow, go short this market, sell dollars, buy something else. No, just stay with this market until it determines a real trend. This is crude oil. Crude oil is trying to make that turn. We've talked about this last week. We thought actually I think it was a pretty good call on our half. We said when the market was trading right around the 45 level, we could see the market popping up to 50, which it did in fact do. But it looks to me like we're trying to, at least if you just look at this, is sort of trying to base out. And we said the one thing we talked about was obviously the positive divergence on the RSI. Now, if the RSI pops over 50, which you could do very quickly, it would be an indication that the market has perhaps made that turn. The other level to look at in this market is probably around about the 151, 152 level. If it closes over there or moves over there, then I think we've made the turn and put a bottom in crude oil. So maybe we've seen the lowest prices in crude oil. It's too early to call yet, but again, we've got this mixed picture in crude oil, 65, indicating a trading range. So not to be very negative or not to be very positive, but a trading range. So, hey, that's it for now. Let's see how February shapes up. I think it's going to be a great month for traders, and we'll be doing our very, very best to bring that information to you. Plus, we'll have some exciting new updates for Market Club. So stay tuned.